Good morning and welcome back to Almus Market Mornings. US China trade officials have reached a preliminary agreement aimed at easing trade tensions. However, the deal now awaits approval from President Trump and Xi, keeping investors optimistically cautious. Meanwhile, President Trump's global tariffs received judicial backing, with the US appeals court allowing their continuation amid the ongoing legal challenges. Today, key event is the release of the US CPI data, and the key thing to watch out would be for any pass through from the tariffs. JK, what's your take? Key step forward for US and China, and another win it seems for the Trump administration in terms of keeping tariffs in play.
Hey, good morning, Saraj. I think a lot of attention is justifiably on US-China trade talks. And looking at the statements from both sides, it looks like it has proceeded to some extent. And of course, we do await final announcements from the heads of the two countries. As far as negotiations are concerned, probably US was slightly in a weaker position because it was not just on the tariff; it was also on export controls and all that. So, as far as US is concerned, they have restricted export of chips to China, over the last several months, and China, on the other hand, has put export control on export of rare earths and related materials. Now, while China may be able to produce the chips that US is producing, US cannot produce those rare earth materials which they very much need for a lot of their industry. So I think that is the main focus of this discussion, and possibly some big give and take from both sides, possibly more from US in terms of tariff and all that. So we must expect some positive news announcement from President Trump or from Xi in the coming sessions. That's why the market is looking up as far as the risk is concerned. Chinese yuan has slightly strengthened, and of course, even the fixing on the daily basis for the yuan was somewhat on the stronger side. Yes, the other news also has been that the appeals court, for which the U.S. Government has appealed against the illegality that was imposed on the International Trade Court on the tariff, was is due for now hearing on July 31st. So Trump has said that with the permission of the court, they have been able to continue the current tariff rates till July 31st. Just July 9 is the date on which the 90-day pause on reciprocal tariffs come to an end. But they have taken this decision to collect till July 31st. Not very clear whether this July 9th has some significance or not. And of course, we may also have some negotiations which may result in a positive development for the tariff with other countries. So all in all, market is looking slightly positive on the issue, but we just have to wait and see how finally these things continue. And of course, on the geopolitical side also, there has been statements from Trump saying that Iran has been very tough to negotiate with, and so I think that is not one of those things that is proceeding as expected earlier. Even from the Israel side also, they have been talking about some missiles being fired. And geopolitics continues to be some sort of a irritant for the globe as well as for the markets. Now, in the absence of any major market data from the US, focus was on UK labor data, which came quite weak. Particularly, the unemployment rate went up, and also the wage inflation was much lower, falling from 5.5 to 5.1%. And this led to speculation that the UK may cut rate next week, if not at least in the coming meeting after that. So that has given some boost to the US treasuries as well. In fact, yields fell across to some extent. However, the large 3-year bond issuance of 58 billion by the US Treasury yesterday pushed up the yield. So once again, now these are minor variations, but I think bigger influence will come from CPI tonight from US, and the CPI is likely to show somewhat higher as the tariffs are now being built into the consumer prices, and so that is a cause of worry. So if the CPI pushes higher, then it pushes even further down the road any chances of Fed rate cuts. And Fed, of course, will also be meeting next week. Next Wednesday, will their decision will be out along with the dot plot, and their decision. I mean, they will be happy to have a latest look at the inflation figures, which is coming out today in the form of CPI and tomorrow in the form of PPI. That will help them to make a better assessment of how the price pressures are going. But market is not very optimistic about Fed getting any dovish. Of course, speaking on the Fed, I think there is also market report that says that the current Treasury Secretary, Mr. Besant, is most likely to replace Powell. Of course, Powell has, I think, nearly a year to expire before he steps down, his term ends, and so this is one possible change that can expect going forward. Of course, quite some time away. Overall, on the markets, U.S. stock markets took the progress in Chinese US trade talks on a positive way, and there was a modest rally. Of course, because the markets have already moved so much since the lows are seen after Liberation Day. I think there is some sort of hesitation to buy the stocks at these levels. As I said yesterday, Nasdaq is already close to 2% from its all-time high, and S&P 500 is about 3% lower from its all-time high. So there is some hesitancy, even as the valuation concerns remain. But still, there was some positive, reaction. Dollar, ideally, if there is a real trade deal between US and China, dollar should actually get bought because dollar has been sold on the basis of tariffs and US-China trade tensions, and if any relief on this matter should help the dollar to recover somewhat. But overall, that should be temporary phase, and any such rally in the dollar will be utilized because of the larger picture. Investors are looking to reduce their exposure to US assets and the US dollar. So maybe we see some short-term up move in the dollar to be used for selling. On the rupee, one of the narrowest ranges of the recent times for the currency, somewhat closer matched on both sides, but despite the positive indications from global cues, neither the stock market nor the rupee have reacted much so far. And maybe I think because we have already had good rally in the Indian stocks and DeFi's, I mean, somewhat cautious in the recent times on the on the valuations on Indian stocks as well. But we have good macros in place, and there is no reason to think that US Indian markets will have any major hiccups. Maybe it's a period of taking profit, and similarly for the USD INR, market awaits the CPI numbers and indications from trade talks before more. I mean, perhaps they are also waiting to see if the dollar gets relief rally after the trade talks, and that could provide the USD INR also a boost where exporters may expect to sell. And one more point to note again is that for the exporters, the disincentive is a very low premium for 1 year, which has now come down to 1.8% or 1 rupee 50 paisa for 1 year. So exporters are not very keen. Definitely, if we do see a rally, which is likely if the dollar gets a relief rally after the trade talks, can see the dollar rupee also see up to 86 plus, and those are the levels where exporters are waiting to see. So again, another day of the week where not much of economic news, but definitely something going forward. Thank you.
Thank you, Vikram. I think the drama when it comes to the post of the Fed chair that always is in the limelight some time or the other now. Of course, the latest being that Treasury Secretary Besant might be a candidate running for the post of Fed chair. Okay, and apart from that, we have had the discussion on the appeals court. We had the discussion on the US and China trade talks, and what to expect from today would be the CPI from the US. It's expected to be slightly higher, as tariffs are expected to have an impact. Uh, What's more important is that because if the CPI prints higher, the rate cuts what are being expected this year will be pushed even to a later date. So that can be a significant impact which the market should be considering. When it comes to the rupee, we were in a very narrow range yesterday. The forward premiums have shrunk quite a bit as the yields differential narrowed. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.